What's up, guys? It's Mr. Fit to Flourish, and welcome to the Fit to Flourish podcast. Today, we're going to be talking about what in the heck happened to the SPY. And today is 5/31/2024, so May 31st, 2024, and it is Friday, guys. Happy Friday. Let's get into it. So, the SPY went absolutely crazy today. It went up, it went down, and then it went way, way up. So, looking at the chart here, we can see, let me back out so you can see the full breadth of this. So, we pretty much gapped up, pushed to the upside, and sold off really hard, really hard. And shorts were absolutely printing today. And I got in on a few puts myself as I saw that VWAP was trading below the 20 MA. And that's the main thing that I always look for. I want to see is volume below the 20 MA. And the 20 MA, which is the 20 moving average, the exponential moving average, is a good indicator of what's happening short term. So can we get into these little short-term day trades and make a killing? And that's what I like to see. But when VWAP crosses below, then we'll definitely make a lot of money. So that's exactly what happened. I also use Saudi ATR indicators, so SATY indicators, as you can see here, and it really shows you where selling is more likely to happen and where buying is more likely to happen. And usually what happens is when we tried the blue line, when we try to get above that, that's the long zone. So if you get above that, we go long. Usually if you reject that area, we start selling off pretty hard. And that's exactly what we did. We got into below the sell ATR and just started selling off. We then got to psychological support, held for just a little bit at the 520 level, and then sold off even more. And we barely got to the 100% move on this ATR before reversing back to the upside. And then again, as you can see here, like I said, we typically get that VWAP crossover. You know you have good chances going long. We got that VWAP crossover here, moved to the upside. It crossed over the 20. And then we had these pretty nice bullish bars here on this. And I'm on the 5-minute time frame, by the way, moving to the upside. Then we had resistance back at that psychological 520 level, and then moved all the way up. And at the last hour, in the last power hour, we saw shorts get squeezed. How do we know shorts got squeezed? Because what happens is after the high of day, typically your big mega traders and your like real hedge fund traders, what they do is they'll set a stop right here at the high of day and they'll go short. Okay, they'll go short and they'll just set that position for the next day or two or whatever, however long. And as you can see, they got pushed out of their shorts because this is going to be their stop. So not too good, but this is absolutely insane for a move in the markets. This is absolutely insane. And then let's take a look at this on the daily time frame. And let's knock off all indicators. Take off these volume profiles here and then just move to here. So yeah, these levels I have are pretty darn accurate here. So I have this resistance here right at 527.37, which is almost dang near where, it actually is where SPY closed at 527.37. So as you can see, we tried that sell off. Then we had a lot of buyers step in at the end and shorts got squeezed. So we're making that push back to the upside. We haven't seen the 5% move yet, and like I said, it typically takes about 11 to 12 bars for that move to happen after our reference bar, which is here, which is this massive bearish engulfing candle. We got an inside bar, which is typically a sign of a reversal. In this case, it would be to the downside. And after we see this bar, which like I said the other day, we typically get a 5% move to the downside. So what's happening right now in the markets? So right now in the markets, we're still at the all-time highs. We're still in some indecision, and as you can tell by a lot of these articles, there's a ton of indecision. So in the beginning of the day, we saw titles like stocks see support as U.S. inflation report meets market expectations. So it meets market expectations. Then just 2 hours later, the stock market starts to bleed and we see stocks fall. on concern about weaker U.S. consumer spending and chip stock weakness. So what's going on? Nobody knows. But right now, we're trying to interpret the data. Just like the Fed, we're trying to see, well, are we going to have rate hikes? Are we going to hold rates for longer? Or are we going to cut rates? Probably not. Probably not at all this year, to be honest. But then let's take a look at this even more. So what did we do? Why did we push back up? So right here, the 20 MA, as you can see, whenever we get above the 20 MA, we pretty much hold that. That 20 MA is a short-term indicator for the direction of the market, pretty much the direction of SPY. And what a lot of the big, like I said, hedge funds, institutional traders, and the algorithms are looking for is the 50 MA. The 50 MA I like to call the MMA, the MMM, the $1 Million Money Maker. And the reason is because a lot of the algorithms are based off of that 50 MA. So the 50-day moving average. They want to see, hey, do we get below this? If we get below this, a lot of algorithmic orders are getting triggered to sell, okay? And then if we cross up this, typically when we cross up the 50 MA, there's a lot of buy algo orders. So typically when you see a cross of the 50 MA, you see massive moves, either to the upside or the downside. So once we cross that, then we'll see a lot of orders get triggered, and I think we'll be on the way down to 505. Now, as of now, we just are pretty much doing a retest of this area, and I believe that we might see a move back to the downside, but we'll have to wait and see what happens on Monday. So you guys let me know what you think is going to be happening on Monday, and that's going to be June 3rd in the markets. But the way I'm playing this, like I said, I'm not swinging. I almost got caught in a swing trade today. I was looking to go short on AMD for the long run, and I would have got killed. But what I'm doing right now is I know that we're moving to the downside based on history. We're going to have 11 more days of downward movement. So what I'm doing is I'm waiting for moves to the upside and then playing the reject. So let me know how you're playing the market this week and in the upcoming weeks. And until then, you guys have a great one. Thanks for tuning in. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and